boy, ladies and gentlemen, welcome back to the channel. We have a ton of events happening this week that I believe are going to really turn this market around in a big way. In today's episode, I'll not only tell you what is going to happen this week, that's about the bare minimum that we could do in a YouTube video on finance for the week ahead, but I'm going to tell you what I think the markets are going to do around these events. Get out your calendar, jot this shit down, because your portfolio will thank you. Now, at the time of recording this video, Bitcoin is down about 2%, sitting at about $94,000, and I think Bitcoin is just Bitcoining. So if anyone, says that in the comment section down below, oh my gosh, look at crypto, look at Bitcoin, I think it's a little bit of realization jitters, I guess, if you will. We'll discuss that in just a moment. Now, do me a quick favor before we get into all of this key information. Hit that like button, number 1. Number 2, subscribe to the channel. And number 3, check that link out down below in the description of today's episode if you guys want to come join the trading community. This is a long journey. This is a long road. Stock's been selling off for 6 weeks. We have a lot of opportunities ahead. And if you think, well, this is a bubble and it popped, why are you even watching YouTube videos right now? Go buy some gold. Go buy some seedlings, okay? Build a bunker. Because, nothing's popped yet. We're not even in a bubble. Fun fact. So, let's get started. But first, go Lions. And my Eagles fans, Lion fans, I want to see you in the comment section of this video repping your team. Let me know how many Eagles guys there are down there. Okay, now let's cut the crap. Let's get into what's going to be happening this upcoming week, okay? But first, I kind of want to backstory that with what's happened in the markets, okay? I want to give you a little bit of a secret. If you've never heard this before, somebody is doing you a disservice. Whoever you are listening or getting your financial information from is leaving you in the dark a bit. Here it is. The markets can handle bad news. We're really good at handling bad news. Like, exceptionally good at handling bad news. We are terrible at handling uncertainty. It's human nature. Let me tell it to you like this. This is a true story, by the way. When I was like 13, something like that, I was at school and got a text on my phone from my mom and my grandma. They're like, it said something like, we need to talk when you get home. And what's your first instinct? Whenever you get a text like that, one, you don't want to go home. You want to delay that as much as possible. Okay? But number 2, you're like, what's it about? Right? That's the response from everyone. Well, fine. I think we can all relate to that. I get home, and, I'm freaking out for like 2-3 hours at this time, right? I get home, and they're crying in the living room, like bawling their eyes out. And I'm like, oh my gosh, family member just died, something really bad. They told me my cat was hit by a semi on the highway, and yeah. And of course that's sad or whatnot, but the uncertainty felt a lot more than a lot worse than the bad news did. Keep in mind, I got the cat like a week before. It was a cool cat. His name was Kilo, because it, looked like a kilo. And, presumably, I've never seen it, that, but, cat was cool. I'd have it in like Walmart bags and like walk around the house with it. It was kind of its thing, like cool ass cat. But you get the idea from that situation, right? It parallels the markets. The markets, we can handle liquidity issues pretty well. That's a tough one, but pretty well. We can handle banking failures pretty damn well. We can handle inflation pretty well. We can handle economy slumping, real estate in the shitter for 3 years. But you shut down the government for 40 days? and people don't know what's going on, and that becomes a big issue for stocks, because not that, oh my gosh, the economy is weakening further. I think we've all expected that. But because we just don't know. Don't know how bad it is, don't know how good it is. Okay, fine. Think about this from a Wall Street perspective. When you go into a trade, you personally, yes, I'm talking to you, but Wall Street, they do this down to a mathematical basis. When you go into a trade, you're going to be thinking ahead for the next catalyst to come out, right? If you're going into a trade on Monday and CPI is coming out on Thursday, you're factoring that heavily into your trade. Well, when the government shuts down for 40 days and the economy was already in a bad place, and you're thinking to yourself, you're a Wall Street guy, and you're like, okay, we're not going to get any economic data. Is this going to help or hurt the markets in the simplest possible way? It's going to hurt the markets, right? It's going to raise uncertainty. Not exactly bad news, because we're not getting any news, but it's going to raise uncertainty, which is likely to put pressure on stocks. Okay, that's the simplest way to put it. The pressure has been to the downside. Now, you get other things that have happened in the meantime. Okay, Michael Burry, concerns about AI, blah, blah, blah. And, you have a shit show sandwich, okay? Well, now the government has reopened. This week, we're going to start getting some of the economic data that we missed during the government shutdown. Most notably, as far as economic data, on the 20th, we will be getting your jobs report for September. We still don't know if we're going to get the jobs report for October, but for September, we will be getting that jobs report. I look at it like this. I don't know what the jobs report's going to look like. Okay, that was 2 months ago. I'm sure it's not great. It's not too terrible. Okay, maybe it's really good. Who knows? Okay, either way I look at it, is it alleviates some uncertainty, which is good. The other way that I look at it is Wall Street is so convinced right now that we're headed towards a recession. I would be willing to bet a large chunk of money that the fear, the expected number, is a lot lower than what we're actually going to get. I would imagine Wall Street expects the September jobs report to be plus or minus 20,000. 20,000 negative, 20,000 positive. We might get a 50,000 jobs report this Thursday. 70,000 jobs report. Wouldn't surprise me. The median in the last 3 months for job creation was positive 30,000 before the government shut down. In the last available data we had. Wouldn't surprise me to get a strong rating. Even if we got a positive 30,000 jobs number, that would be a lot better than where consensus is for September. Now, the consensus for October was negative 60,000. And if that's kind of the consensus for September as well, then you're going to be in for a big positive surprise. Now, people say, the Fed this, the Fed that, blah, blah, blah. You don't need the Fed. You don't need rate cuts. You don't need none of that for stocks to do well. Okay? What you cannot have is what we have right now. That is the worst recipe for stocks. What is it? Wall Street thinks we just produced negative 60,000 jobs in October. At the same time, the Fed is seemingly unwilling, I think they're compromised, to cut rates. So you have a plummeting economy on paper, expectations, not even on paper, just expected plummeting economy, and no rate cuts. You see, that's the worst possible outcome. If the economy is better than expected and we don't get rate cuts, fine. Same old we've been used to for years. If the economy is actually plummeting, then we're going to get rate cuts. Okay? If we actually get negative 60,000 jobs, the Fed's going to be cutting rates in December. We don't know what that looks like. And that is what has caused the uncertainty. Okay, so that is what has been happening so far. And I know Took a little bit of time to explain that, but it's very important that you understand that, or you might not understand the rest of this video. So now that we're on the same page, let's get into major catalyst number one. That is earnings, okay? And you're going to see as this video progresses why all of that shit I just said was so important, okay? Now, Monday, you have XPeng, Jinko Solar, ARB. Stocks that really don't matter typically report on Monday, okay? And, well, let me rephrase that. There's one stock that the most recent purchase in the trading community that actually reports Monday morning. That stock was up like 20% on Friday. So odds are we have a really good earnings, and that stock probably does really well tomorrow. So, but not a lot of big companies report on Monday. Fine. Tuesday, Home Depot. That's going to be your first big inkling of how the consumer is doing. Now, these are discretionary projects for the most part, okay? As far as DIY, not a big deal. Sure, you get some aspects, a lot of aspects of the construction market and all of that. Do we think that's great? No. So the bar is pretty low for Home Depot. But it will tell you a little bit more about the economy. Not too much else on Tuesday. Wednesday is really the big day. Okay, Wednesday pre-market, you have Target and TJX as well as Lowe's. Between Home Depot, Target, TJX, and Lowe's, you're going to have a pretty good understanding of what's happening with the consumer and the economy. Okay, then Thursday morning rolls around, and you get Walmart just to top it off. Now, Walmart's the most important one of the group because that is directly consumer spending money. How are they doing? Okay. Now, fun fact, back in 2007, Walmart was one of the first companies to warn that the consumer was slowing down, that the consumer was in a lot of financial pain. Like almost 2 years before the great financial crisis started, Great Recession, which if I'm not mixing up my days, Lehman Brothers went bankrupt September 19th, 2008. I think that's correct. Okay. Either way, end of 2008 is when shit hit the fan. Walmart was warning the markets as early as March and April of 2007. So, a year and a half, call it, before you actually had a recession. And if a recession starts, and then you got to backdate that 2 quarters or 6 months, Walmart was warning a year before a recession actually started. Okay, so what does Walmart say about the economy and the consumer? Walmart's going to tell you. If Walmart says things are fine, not really seeing much of a change, that's your sign. Now, Thursday morning, you're also going to get the September jobs report, which will alleviate some of the uncertainty mixed with what I think Walmart's going to say is not a lot has changed. People are still spending. They're discerning in some areas. They're not buying the highest end products. They're value shopping. A lot of the same old, okay? But mixed Walmart earnings with the September jobs report, you're going to have a better understanding of the economy. And what does that mean for the Fed? Well, we'll just have to wait and see with, what happens. But that'll even give the Fed more clarity. Okay? So I actually think Walmart is the single most important earnings for evaluating the consumer. But we've already had a lot. Wall Street just has short-term memory loss, and they don't look at things the right way. We had the credit card companies, for gosh sakes, okay, that reported earnings, and that's basically what they said. Nothing has really changed. I think they all raised guidance, like lowered loan loss provisions. At least a few of them did. Can't remember these specific names. I think American Express lowered their loan loss provisions, if I'm remembering correctly. But those are earnings I always pay attention to in good or bad markets. I want to see how the consumer is doing. Credit card companies tell you that. Walmart tells you that. Okay, so a lot more certainty will come by Thursday. I did not skip the big dog for no reason. Nvidia reports Wednesday and after hours. Nvidia, the cream of the crop in terms of AI, the godfather himself of AI, Jensen Huang, this dude is a fucking rock star. Okay? I've never heard Jensen Huang, disappoint on an earnings call. This guy is clean, crisp, and tells you it how it is. Okay? He in fact did that less than a month ago. He said that AI demand is very strong. That, it's better than ever. Look, Jensen Huang, AI comments. Okay. Yeah, he said that China is going to win the AI race. That's not great. And that's definitely got the headlines recently. A comments on GPU demand. Let's see. Jensen Huang, Nvidia CEO, stated that demand for AI computing has increased substantially, particularly in the last 6 months of 2025. This surge is driven by advanced AI models moving from basic tasks to complex reasoning, leading to both an exponential increase in compute power needed per user and exponential demand for the AI itself. Huang believes the company is at the start of a new industrial revolution, and the demand for their latest Blackwell GPUs is very high. This was on October 8th? Okay, I was a little wrong. 5 weeks ago. Sorry. Wall Street has short-term memory loss. It's just in one ear, out the other. Like, these guys are the blind leading the blind, okay? Here's a whole CNBC. Dude was on CNBC, okay? You just can't make this shit up, okay? I feel like I'm in my own echo chamber. Like, people are scared of AI and scared of what Nvidia is going to say. Like, this happens every quarter. But Jensen Huang just came out 5 weeks ago and told you what they're going to say. They're going to say demand is, rising exponentially, the last 6 months. Dude was specific as hell, okay? NVDA. I might buy a call option or two. We got the secret sauce from Jensen 5 weeks ago, okay? Well, Nvidia's done pretty well. But, again, you get the idea. Jensen Huang, on Wednesday, is going to tell you that AI is alive and well, things are booming, and that everyone else is, I don't want to say this word. We'll just call it slow, okay? Everyone else is slow. They're slow to understand these things. And, I think this is going to cause a large resurgence in the risk on trade of this market. Now, you do want to be discerning, like the consumer at Walmart. You don't want to buy the highest end product, okay? You don't, personally, I like quantum and nuclear. There's one good quantum company that is actually bringing in revenue, but it's really hard to value quantum because it's a long-term thing. And for a lot of these companies, like what was it, IONQ or D-Wave or maybe it was Rigetti, I don't know. They said within the next 3 to 4 years they're going to have a supercomputer. That doesn't do much for you now, next year, the year after that, maybe the year after that. With some of those stocks trading at really high valuations, some of those areas might be a little bit slower to come back. There might be a little bit more wobble in certain areas. But some of the higher quality areas, stocks that are trading at less than 2 times sales, 2 of them in which we are invested in the trading community. Check that link out down below in the description of today's episode. High quality companies growing at hundreds of percents, projected to grow at hundreds of percents next year. Those are going to be the areas that bounce back and do very well. Tesla, another big one. Tesla's been a real outperformer in this market. The stock's down like 14% from its recent high. Meta's down 20% from its recent high. Oracle's down 35% from its recent high. Even some of those stocks are going to come roaring back, I think, after some of the clarity from, big box retailer earnings, the economic data, and Nvidia earnings. Like, it's almost impossible, in my opinion. Almost. I'm not a financial advisor. I'm not a financial planner. Almost impossible to see another large move lower unless we get some kind of new information. Because Wall Street is so bearish right now, like, there's no way in my mind that Jensen Huang disappoints Wall Street with what he's going to say. He told us what he's going to say 5 weeks ago. I find it very unlikely that Walmart gives you a recession warning like they did in 2007. And go look. Man, we got time, right? We got time. Okay. Walmart recession warning 2007. Okay. In 2007, Walmart issued warnings about economic pressure on consumers, leading to a cut in its profit forecast for the rest of the year, although it continued to report strong quarterly numbers. These warnings indicated that consumers were feeling the strain of a slowing economy, with some analysts pointing to a possible recession, which likely began later that year. I want a date, okay? I want a date here. Where's the date? I want to know exactly when Walmart gave us the warning. Can we get some archives? Archive me, please. Nonetheless, you get it. Okay? Walmart is your bellwether indicator. They always are. Okay? For Wall Street to, not really care too much would be a big mistake. But that's why I pointed out to you. Because, Walmart has good things to say. Target, who cares about Target? But if Walmart has good things to say, Nvidia does well, which they're going to, and the economic data we get on Thursday, we might be getting, I think, personal spending or some other smaller data sets, but people just really want the jobs report at this point. You get all that coming through, you're going to lower uncertainty, not raise it. And that's ultimately like the barometer, right? Are you going to be more certain on Friday on what's happening in the economy, what's happening with AI, or are you going to be less certain? You're going to be a lot more certain, whether that's good or bad, okay? Now, then you have to compare that to where the markets are today. Are they super optimistic, or are they super bearish? They're super bearish, okay? Super bearish. Like, look at the CNN Fear and Greed Index. This thing's in extreme fear at 22. Market momentum is fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand, extreme fear. AI investor sentiment survey. Almost 50% of respondents are bearish. Another almost 20% are neutral. And 31.6% are bullish. Nobody's bullish. They're all bearish or neutral. Okay? Percent of stocks trading above their 50-day moving average. At less than 39%? Hello. See the sunshine. Like, this is bad, okay? This is really bad. And I kept saying that on the cruise I went on. Like, my sayings came back with me to Michigan. Say, see the sunshine. Hello. Yeah. I can't go into that one in too much depth. But hopefully you're catching the drift that I'm sending downstream here. Okay? Hopefully it makes a lot of sense. Even when you look at your indexes. Okay? Look at the S&P. Yeah, you're still doing pretty well there, partner. But, okay, you're down 2.65% from all-time highs. At the low, you were down about 4.2% from all-time highs. And that's you could call that a correction if you want to. Okay? Call it a correction. Call it a chop. I would call it a baby correction. Okay? What about the NASDAQ? Nasty NASDAQ. Okay? We love the nasty NASDAQ. Okay? This is down 4.5% still from all-time highs. At the low, it was down 6%. You could definitely call that a correction. What about the even nastier Russell 2000? Like, if these were, strip clubs, I mean, you're in the ghetto here, okay? Russell still down 6% from all-time highs, okay? At the lowest point, it was down about 8%. You've basically even went through a correction on the headlines. Let alone, again, Oracle down 35%, Meta down 20%, Tesla down, I believe it was 17% from recent high to recent low. Let alone the AI stocks. Look at BBAI, for an example. Well, do we want to look at all-time high or recent high? Let's look at all-time high that was set back in February. BBAI is down 42%. Okay? Recent high, the stock's down 36%. Yeah, starts to get uglier. Look at Tempest. Was this a Nancy Pelosi? I know, it's Pelosi. I like to call her Pelosi. Sounds more Polish. I don't know. This one's down almost 35%. At the low, it was down about 38.5%. Again, you get the idea, right? We don't have to keep going in this. We can keep pulling shit up, okay? Even look at Sweet Green. Oh my gosh, what a chart. This is actually a stock that I recently bought too. Woo! What a chart. That thing started to make a little baby bottom, which again, this is not a high conviction one for me. It's a easy 10x if the stock does get their shit together. There's a lot of room for improvement. But again, you got to throw some seeds out there. This is the time of planting, not the time of harvesting. But you get the idea. Okay. This week is likely to be a really good week for markets. Now, let's take a look at some of the economic data that you will be getting. And there's going to be a bunch of Fed speakers this week as well. Monday, New York Empire State Manufacturing Index, expecting that to come in at 6.1. Last month, it was at almost 11, so expecting a decline. Fed Williams, Fed Jefferson, Fed Kashkari, Fed Waller, and Fed Logan will be speaking on Monday. On Tuesday, the ADP employment change on a weekly basis, the last update we had was negative 11,200 jobs. So, yeah, not great. We'll see what they say now. The NAHB Housing Market Index, expecting to come in lower as well, just barely. Fed Barr will speak. He doesn't really do monetary policy. He's more of the banking guy, so it doesn't matter. We're supposed to get export and import prices month over month and year over year on Tuesday. Who knows if we're going to get that. Capacity utilization, industrial production year over year, and manufacturing production month over month and year over year as well. Supposed to come out on Tuesday. Probably not going to get that, but we will see. Wednesday, you get the FOMC minutes. This is not a catalyst, okay? I know it's highlighted in red like it is, but the FOMC minutes are never a catalyst, ever, for markets. That comes out at 2 p.m. on Wednesday. Nobody, stocks might react a little bit, but it's backwards information. It's outdated at this point. It's the transcript from the last Fed meeting, so, nobody cares about that. It's all about what's coming next. Again, on Thursday, Philly Fed Manufacturing Index, business conditions, CapEx, employment, new orders, and prices. We don't have estimates, but I would imagine the estimates are probably lower than last month, if I were to just spitball something here. Existing home sales for October should be coming out. Looks like they will be coming out. Kansas Fed Composite Index, Manufacturing Index, Fed Goolsbee, Fed Cook, Fed Hammock. Okay, not the hammock on your porch. Fed Hammock. Okay, it's a Fed hammock. Premium hammock. No, a shit hammock. I should say that. Thursday, initial jobless claims, continuing jobless claims. Who knows? I mean, you're stacking them at this point. You got 1, 2, 3, 4, 5, 6, 7, 8 initial jobless claims we're still missing. I don't know why they can't process this. Literally, it's all electronic. It's all done on the computer. You can see who freaking files jobless claims. You can literally search by state right now and see who's filing. I don't know why the BLS can't get their act together. Who knows? Maybe we get that data on Thursday. Friday, maybe I should give them a little bit of grace. The government just reopened. Let them, finish their lunch and get back to work. Friday, Fed Barr, Fed Jefferson, Fed Logan will be speaking. Fed Williams will be speaking. One of the few doves left on the Fed. Fed Williams, Fed Waller, Fed Bowman, and Fed Moran are your doves at this point, okay? Fed Jefferson, Fed Logan, Fed Kashkari, Fed Bostic, Fed Cook, fucking Fed blah, blah, blah. Everyone else is pretty much team wait and see. That's why your odds of a rate cut sit at only 40% now, and a 60% chance of a cut or a pause. Yeah, this is weighed on markets, but I think it's really the uncertainty, again, that is weighed on markets more than anything else. And you've been in the worst possible setup, right? Markets expecting a really bad, jobs report for October, and then the Fed's saying they're going to pause. The Fed's compromised anyways. Who cares? I, again, am just willing to make the bet that you're going to have more certainty this week versus less certainty. And look at that, even in the time of recording this video. Maybe I should just make like 20 videos a day, because look at Bitcoin. Fucking vertical. Yeah, I'll take credit for that. No, I'm not that conceited, okay? But yeah, that's the nutshell of what's going to be happening this week. And yeah, it's, again, Walmart earnings on Thursday. Economic data as well coming out on Thursday. I know the September jobs report is coming out Thursday. You might get personal spending as well. I think that might be on November 26th, actually. November 26th is next Wednesday. That's when you might be getting the other data, personal spending or retail sales, some of that. Doesn't matter. This week is what kickstarts this end of the year rally, in my personal opinion, because you really have to ask yourself, are markets bullish or bearish? Put it from 0 to 10, right? If 0 is, super fearful and 10 is super bullish, you're at like a 3, okay? Maybe a 2.5, maybe a 2, okay? Like, it's really bad. People's sentiment is shit, okay? And then put uncertainty on a scale from 0 to 10. 0 is, just for the sake, no uncertainty. And 10 is very certain. You're at like a 2. You're very uncertain right now. What's going to happen this week? Uncertainty is probably going to go back to like a 5. Maybe a 6 with Nvidia and Walmart earnings. And that's going to, lower the fear level in this market. Just by getting certainty. Doesn't even have to be the greatest numbers. As long as Nvidia doesn't shit the bed. Doesn't have to be, you don't have to have a rock star economy right now. You just have to have an economy that's not in a recession. I think that's a pretty low bar. And I think we're going to beat that low bar and get some certainty and get this market working again to the upside. Anything can happen. Okay, I'm not a financial advisor. I'm not a financial planner. I say shit. I'm kind of slick with it. Okay. So it's important you come to your own conclusions. Like, shit, I'm wearing a freaking orange jacket that I bought for like $30 on freaking, I think TikTok. I don't even know. It looked cool, so I bought it. First time wearing it. I honestly like it. It's warm as hell. I think it's wool. I don't know. And I'm wearing a Lions shirt under it. Okay. Not a financial advisor at its peak performance of not being a financial advisor. So come to your own conclusions. But I do hope this makes sense to you. I hope the time taken in this video resonates with some of your prior understanding and knowledge of this market. If it doesn't, let me know down below in the comment section. Maybe I missed something. Maybe we can clarify something for you. But I think it's pretty self-explanatory. Even Tom Lee says the S&P is probably going to hit 700 by the end of this year. I mean, I'm no like mathematician here. Like, math was my sore subject in school, believe it or not. Some of you guys are like, yeah, I already know that, dude. That would be, upside of about 4.2% from here. Doesn't sound crazy, but a new all-time high. And I think enough to get the AI area of this market working again. And I think that's where a lot of the pain is really, concentrated. Healthcare has actually been doing quite well. I think healthcare just had like 7 or 9 straight green days in aggregate, not every stock, but in aggregate, the healthcare index. Not AI. You can barely get 1 green day in AI. If that. That's asking for way too much these days. So Let me know your thoughts on all of this down below in the comment section. I believe we did this whole video in one take, which kind of impressive. Brrr, gotta let it spin up top, you know. I think some of my best videos are one takers. So hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. You can also tell that I'm starting to feel better as well, not like cutting up the videos as much. Don't have to pause as much. I'm getting a little mental clarity back, you know, post video clarity, if you know what I mean. But yeah, I think I could go on and on, honestly. So we'll just go ahead and end it. Okay, maybe it's the Arizona green teas talking. I don't know. We're wilding out today. I think I'm excited for this upcoming week. But nonetheless, come join the trading community down below in the description of today's episode. You'll find the link. If you guys also want to get yourself $100 in your choice of free stock when you sign up with the link down below for public, deposit $1,000, get $100 in free stock. I believe I get a free share or something like that, so check it out. That's the main brokerage that I use, so yeah, it's free money. Can't beat it. Free 10%. Say what? That's it. Have a great rest of your day, and I will see you in the next one.